Welcome, ladies and gentlemen, another new episode of Commodity TV out of still our COVID-19 home studios. And with me here is now Paul Huet, the Chairman and CEO of RNC Minerals, the successful gold miner out of Australia. And Paul, you are at home. How are you? Good morning.
Hey, I'm doing well. Thanks, Johan. Yeah, I'm like the rest of the world trying to prevent the spread, so staying at home with the family.
Fantastic. Well done. Well done. And you look quite healthy and in good shape. So that's the most important thing today. Fantastic. All right. RNC Minerals, you guys are very successful. You had produced some very good production numbers already. And before we talk about that in a minute, about your Q1 results, let us talk first about your fantastic news release just, I think, 2 hours ago it was, about the high-grade gold results at HGO. And also you begin a drilling program at the Paleo channel targets. So can you comment a bit on that, please, and what it means for the company?
Yeah, sure. Johan, look, this has always been part of our strategy to try to unlock some of the entire district. We have 1,800 square kilometers at Higginsville. And remember, this district, Johan, had been saddled with a significant royalty for years. We're so happy that we've been able to negotiate phase one back in the fourth quarter of 2019. We've just announced a deal with Morgan Stanley, finalizing all the NSRs and the 2% legacy. So this was always our intent in phase two, and you're starting to see some of the results. So earlier on, we had announced 5 new additional targets in Higginsville. Today, we announced some further expansion potential at Baloo, the Paleo channels, and the Paleo channels is a completely new district, something that we're going to be focused on very hard because it has the potential to actually help us with feed into the plant. And let me explain that. And look, this is early on. And if I turn my head a couple times, it's not that I'm being disrespectful. I'm just making sure I give you accurate notes from my screen here.
That's good. Yeah, I have it in front of me.
Yeah, so look, the Paleo channels, there's a lot of work to be done. The results have been phenomenal. Look, 234 gram over 2 meters, 39 gram over several meters. So consistent with some of the previous results, which we're excited about. But the Paleo channels is an old sedimentary area. So it could, and I'm not saying we're going to do this. I'm saying, look, here's some of our excitement. When we think of the Paleo channels, why do we get excited? We don't just get excited about the grade. One of the things we've been focused on is mill capacity and ore sorters. We're always trying to increase our production profile organically. And this could potentially be a source where if the engineering works out, it'd be something along the line of the ore sorters where we could potentially feed some product from this district, right from the Paleo channels, and pump it to the mill. That means it would bypass the front end of the mill, Johan. This is very different for us. For all the other targets, we have to transport it, which is very cheap in Australia, crush it, grind it, run it through the front end of our mill. Our bottleneck at 4,000 tons a day, Johan, is the front end of the mill. If successful, and I'm saying if, but look, there's some encouraging results. That's why we're focused on it. We have a lot of work to do yet, but we're working hard at it. If successful, this could potentially bypass the front end of the mill and be added after the crushing facility. That could mean removing that bottleneck. So Paleo channels is a really exciting area. We know we're very excited about it and how that could add to the mixture. Bottom line is simple. We've always been focused at putting 24 months of feed in front of that plant. With the addition of the Paleo channels, the Pioneer deposit, the potential extension of Baloo, and I'll just jump into Baloo right now. Today, Johan, you look at the results we had today, they suggest that initially we could evolve, or the Baloo open pit could eventually evolve into an underground target. And we've always said that. We've said Baloo has been constrained by drilling. The more drilling we have, the more information we have, the better decisions we can take. As we get deeper into our pit, we see some results here. We've got 5 grams over 8 meters, 8.4 grams over 7.6 meters, and another 5 grams across 10 meters. Johan, these could be some very large, profitable stopes for us underground. So again, a little more excitement for us. When you couple this whole press release, it surely extends our life of mine and beyond that 24 months significantly.
Fantastic. And also, as I see, this is all quite shallow, I would say. I mean, like from 106 meters, 125, 111, even from 21 meters, 16 meters. So it looks to me like even if you would go underground, this is not a large capex. There is not needed like a big shaft or a super spiral ramp and stuff like that. I think it's quite easy to access then, it looks to me, right?
Yeah. So look, we would take a model that's been adopted throughout almost all of Australia. You travel in Australia, you fly through Australia, you look at some of these open pits that exist in WA, you will see on the wall of a pit at the bottom a ramp going into the ore zone, and you're correct. So we would be so far advanced that we could put the capital directly at the bottom of the pit, accessing the ore, reducing capital significantly. And look, that's a proven model everywhere. I've seen it in Nevada, Canada. It's really common in Western Australia. Certainly the results that we're seeing indicate the potential, the possibility. We'd have to have more results, but they're very encouraging. You know, when you start seeing 5 meters across, 5 gram across, 7, 8 meters, 7, these are high grade underground targets here.
And that would mean that you can maybe, and if, I know it's a bit too early for that question, but well, let's put it that way. Would it be the game plan that you can finance that out of cash flow?
Oh, there's no doubt. Yeah, no. There's absolutely no doubt for us. Look, all the steps we have done here, we've just been focusing on one press release today. We look, Johan, we bought Spargos earlier in the week here. That's going to be coming from cash flow from operations. We renegotiated phase 2 of the Morgan Stanley royalty, a royalty that has been there 20 plus years. We paid $9 million US. The payback on that is 2 years, and that only includes, and this is an important thing here, that only includes what we know of today. Now think about this. A district 1,800 square kilometers has had very little attention in 2 decades. We're coming in, we have a $10 million program this year. You see the results. We're May 20th around, May 19th. You see the results from our drill bit. That organic growth, it's coming from here. The results, they speak for themselves. Every month, every quarter, we're announcing something new about Higginsville. So it's an exciting time for our company, our shareholders, and we're up for the task. We're on it, and we're going for it.
Fantastic. I know that's why I'm a shareholder also. And you've done it before, I know that. When do you think you can really start like to integrate those new, I would say, let's call it projects like Jupiter, Baloo, Mitchell, Pluto, Pioneer, all those deposits. When do you think you can start to integrate them into the production, and what can we expect like from a growth perspective?
All right, so let's just go there. Let's talk about all the targets. Let's name one of them. So we've been very blessed with a lot of them. Fairplay North. Fairplay North was something a kilometer away from the mill that had been lying there for, again, the mill was built in 2009. This open pit had been sitting next to the mill a kilometer away since then and before. We've already started mining in that one. So when you look at all the areas, we've already started. So again, I said earlier on, our goal is to put 24 months in front of the mill. That was our goal, and we've accomplished that. Now our goal is to say, all right, what can we do beyond that? But what can we do to increase it as well? So increasing it will require a displacement of grade, because we're capped at 4,000 tons a day, 1.4 million tons per year. So a displacement of higher grade and or sorters, and or potentially adding paleo channels. So you can see the recipe and the mixture of all these things coming together would certainly provide us a nice growth platform. And look, well, let's remember something here. Let's face it. RNC, the new Karora Resources here, it's our first year, Johan, of owning our own mill. It's our first year ever in the company's history of having sustainable production month after month after month. This is This isn't something that this company has done year after year after year. We're going to do 100,000 ounces in the first year right out of the gate. Like, I've been doing this 33 years. It's not common for a company to just come in and say, look, last year we had one asset when we took over. It was under care and maintenance. We were drilling. You know, you look down the road, 6 months later, the company's got new shareholders, new board of directors, new management, new name. We're delivering consistently. We have a plan where 2020, we're going to do 100,000 ounces. If you look at the world around us, and I pray that everybody's healthy and safe, but this COVID-19, it's serious stuff here. Some of our peers, 50% is a number I've been told, and I'm not fact-checking, and I'm telling you a number I've been told. It doesn't surprise me. 50% of the mining companies throughout the world have dropped off their production numbers for the year. They've removed their guidance, and they have yet to replace it. We're standing here, the first year ever, a new team, new board, and we're jumping up and down going, look, we're here, we're delivering, we're going to still achieve our guidance on the heels of, I know you'll probably ask me, but I'll jump in, on the heels of a great quarter. Our guidance for the year, Johan, 90 to 95,000 ounces. Q1, we did just slightly under 25,000 ounces. Like
times 4 is 100.
Yeah, times 4 is 100. There you go. Look, and that's the high end of our guidance in a very, very, very challenging market. Look, COVID-19 is again, it's a serious thing. I can't tell you how proud I am of the team we have assembled on the ground in Australia. The whole team, from the board of directors, the executive, this flows right from the board where we said, we're going to take a stance. We want to be proactive. We don't want to react to everything. We were one of the first companies to have a full-time nurse, full-time doctor. We continually prepare ourselves proactively for the health and safety of our people. We've been very fortunate, not one active case. My managing director there, Graham Sloan, has been able to successfully change the fly-in, fly-out ratio. In the past, this company used to have about 80% of our people fly in, fly out, Johan, and this is helping our success today. Today, we have approximately, at Beta Hunt, 70% of our population that's local. So the lowest we saw in our workforce in Q1 was 68%. So when we were at the bottom of the trough, we're trying to deliver our production safely with only 68% of our workforce. And it's no surprise that 70% of our workforce is local. Those mining companies where 80% are fly in, fly out, they're struggling more. At Higginsville, we've actually taken it a step further because that ratio is a little higher for fly in, fly out. We've chartered our own plane. We said, we're not going to fly a commercial airplane. We're going to put our people into our own chartered airplane. All these things we have done are proactive to protect our people, to protect our contractors so that we can deliver. And you see the results. You can't help but argue the results. We had an astounding Q1. Cash is up. There's no better storyteller or report card than the cash in the bank. Our cash went up $4 to $5 million. We ended just about $38.5 million Canadian in cash. And Johan, that is after paying $5.3 million into hedges that we had. So if we had not had
what's going on with those hedges? Are they diminishing in that quarter?
Yeah. So look, Q2 of 2020, our hedge position will be gone. We will no longer have a hedge. So in Q1, we had 2,500 ounces per month. So 3 months, 7,500 ounces, which we had to give up $5.3 million. You start doing some math here and you start going, okay, if they're going to eliminate it in Q2, which we are, we've told our shareholders and we've listened to them. Listening to our shareholders is important. We've listened to the new shareholders and they're saying, look, do not hedge, Paul Huet. Don't do that to us. Let us hedge. We want the upside on gold. And our goal is to take advantage of that. But you start looking at some of the things we've done here. If in Q1 we had to give up $5.3 million in hedges, and you start looking at the royalty that we bought for $9 million US, you start looking at Spargos that we bought for a total of $4 million upfront, another $1 million, then $1.5 million, so $6.5 million Australian. These things are really taking advantage of $1 in our bank account and making it $2 to $3 for our shareholders. This is where management and the executive team are taking advantage of the cash we have, deploying it, putting it to work, and creating more than $1 than that bank account. So I know I get a little passionate about it, but it's hard not to get excited when you see some of the results that we're doing.
That's right. Absolutely. No, and I mean, you were just talking about that most of your workforce are local. So I could imagine that this has also a positive effect on the AISC, or let's say the all-in costs, by the way. And you have written in your Q1, let's say in your first quarter 2020 press release, that you had $1,101 per ounce AISC, which was perfectly within the range of your guidance, and you expect approximately $1,000 by the end of the year. So my feeling is you will be below.
Yeah, look, the truth is we've been working very hard. And again, I'm going to repeat myself here. Amongst COVID-19, we still managed to reduce our costs in a quarter, where a lot of people are paying additional costs for nurses like us, for extra charters like us. We still managed to reduce our cost. It's been 3 consecutive quarters, Johan. It started on the first quarter was right after we got the mill. And if you look back, even if you look at RNC before owning the mill and some of the toll milling deals we had done, it's not far back in my memory, even looking at the financials, where AISC in this company exceeded $2,000 an ounce. When you look at the quarter before I took over, it was about $1,300 an ounce. You see a consistent trend and pattern quarter after quarter after we buy that mill, where we're executing not only on production, but we're very, very disciplined and focused at reducing those costs. And it starts with what you said, personnel, changing over the location of your people. That has a tremendous impact on our cost. Wait till this COVID is gone and we can get back to some normals. We'll get to that 1,000. We're certainly focused on it. Despite gold going up, we're not being sloppy. We're taking the other approach that what if gold goes backwards? Now, I'm very bullish on it, but it's a very disciplined approach that we're going to take. We've all been, look, this is my 3rd cycle. I remember in 2000, gold 264 an ounce US. That mentality stays in my head. When we're making operational decisions, we're always thinking, yes, we got healthy margins today, but we owe it to ourselves and to our shareholders to be productive, to be efficient, and to always watch our dollars. And when we're spending it, make sure you're not spending $1 to make $1. Make sure that it's incremental, so that dollar is worth $1.50, $2, or $3 even. And in our case, there's no doubt some of the recent transactions are definitely 1 + 1 = 3.
Super. You have also started a share buyback program. That's quite interesting. Does it mean that you did not find, let's say, better investment opportunities, or does it mean that you think your stock is so heavily undervalued that you just wanted to say, hey, market, listen, we are too cheap. We're going to buy our stuff back to show you that we are bringing down the amount of stock, and so we are raising the earnings per share?
So look, our stock is cheap. We're always going to be evaluating these scenarios of what's the best use of our dollar. But I want to tell you something. Johan, again, I've been in mining 30 plus years. This is the first time I personally lead an NCIB, a share buyback. When you have to think of the whole time, and it's all fresh in my mind. We started this share buyback process. Our share price was 19 cents. And we went to the board and said, look, we are so undervalued. There's such a disconnect right now between what we're doing, what we're accomplishing, our results and our cash and our share price. We must do this. It took much longer than I had expected. And not longer than normal, but it's a process that I had never gone through. it took us so much time to finally get it, all the approvals in. We have to obviously get board approval, which was done relatively quickly, but all the other external outside approvals that you need to get done. So in the back of my mind, I was always thinking, look, our share price is 19 cents. We did a financing when I first became CEO at 40 cents, and I knew then that that stock was cheap. So having that optionality again, providing us that flexibility to use cash to buy back shares at some point in time is certainly something worthwhile for us and our shareholders. Yeah, so when we started it till the time we finally got it done, it took a lot longer. We still have to comply with all the regulations on blackouts. So that was the other thing. I didn't look, I just wasn't exposed to it. So the fact that as soon as we got it, I was going to buy, I went out, we had to the banker, said, we're buying X amount of shares right now. I said, I want to show we're going to use this thing. And the first thing I got was a call from legal going, hey, Paul Huet, I know you're excited, but step back a minute here, Mr. Huet. You're under blackout. You have to follow the same rules as everybody in the country. So I just went, oh, man. Okay, so that's the way things. So,
okay, super.
More tools in our toolbox, Johan.
Sorry? More?
More tools in our toolbox.
Yeah,
Everything
absolutely.
we're doing has been strategic, thinking of our shareholders time and time again.
Yeah, fantastic. Last question, because I remember like 2 years ago, I saw those beautiful big rocks at the Mines and Money in London, and that's called coarse gold. I call it nuggets, of course, but as you are right, that's coarse gold. So can you maybe give us a hint on, I think it's from Better Hunt, right? And can you give us a hint a little bit of your thoughts, what is going on there? Because to me, sometimes it looks a little bit like a bit of a joker in your backyard, because you are not planning with those ounces, right? So we can have a positive surprise.
No, that's right. Our plan has always excluded those ounces, and it will for some time here now. Look, nobody's more excited than me to see that coarse gold. Having those nugget effects can impact significant things. It's all about timing and larger picture here and how we put it into our plan. But throughout the year, you'll see us continue our mine plan. We know we're saddled with a large royalty at Beta Hunt. We would always do the best we can for our shareholders to try to find a mutually beneficial solution at reducing that royalty. And look, let's face it, being less reliant on Beta Hunt all the time and having flexibility and optionality, that is removing risk for our shareholders, mitigating risk, providing additional sources of feed to that mill. And all these steps we're doing with the renegotiation of Morgan Stanley Phase 1 and Phase 2, the purchase of Spargos, providing us that optionality. It all has a path into that coarse gold. When do you mine it? Well, we'd obviously like to mine it at some point where we didn't have to pay such a heavy burden so that the money could come back to our shareholders. So we could use it properly. So look, you're right in saying the coarse gold is excluded from our mine plan at this point. We want to be recognized for who we are. We're a gold mining company that can be successful even without it. We are not going to be, our livelihoods and our entire success for our shareholders and our company will not be completely reliant on that coarse gold like it was. When I walked through the doors in this company, the life and breath of this company was coarse gold, coarse gold, coarse gold. And when you were done with that, it was, where's more coarse gold? Today, it's about making money. Coarse gold is part of the recipe. Making money, being safe, driving value for our shareholders, that's going to change this company. The new Karora is doing that.
Yeah, super. And now the last question, and please a short answer because we are already at 24 minutes in that interview. As we have half of the quarter is done of the Q2 now. Are you satisfied with it?
Yeah, look, I opened up, I think, somewhere along the line saying that we're very fortunate and one of the few companies that has maintained our guidance, and I'll repeat that answer, Johan. There's no reason to believe our guidance at this point will be off track. We continue to hit the milestones and deliver where we need to. So
Super. Perfect.
Right,
It was
Johan.
a great last sentence, Paul. Thank you very much. Very kind to give us so much time. And that was a great update, actually. And I think you guys are doing extremely well, and you are doing the really right things. You and the team, keep it going. And I look forward to see you soon, personally, hopefully. Then, and also I look forward to the name change, because then it's going more towards the gold in your business and not the nickel, right? And so from that side, all the best. Stay healthy. Kind regards also to your wife and your family. Also stay healthy, please. And I really look forward to see you. And we need to have a real good cold beer.
All right.
Super. Thank you very much, Paul. Thank you. Good seeing you. Yeah, ladies and gentlemen, that was Paul Huet, the Chairman and CEO of RNC Minerals. And you heard it. Things are going extremely well. They keep finding high grades on and on. They are really expanding their projects. They are expanding the mine life. And they are working on new gold deliveries, I would call it, out of the projects for the future. 24 months is in front of the mine is always the target for them, or even longer than. And I think with the buyback of the Morgan Stanley royalty, this is something which really, really helps. And also with 70% really of local staff that reduce the cost dramatically, I think they are perfectly on the plan, on their guidance. And I see definitely 100,000 ounces plus for this year, as Paul probably sees it too. And so from that side, thank you very much for watching us. Check out the company. I really would propose that to you. And also, Paul, to you, all the best. Thanks, and bye-bye from Switzerland. Bye-bye.
Thanks,
Thank
Johan.
you. Bye-bye.